Hey everybody, Boris, welcome to Commodity Dollars for Aussie dollar, dollar CAD, Kiwi dollar for December 5, December 9 of 2016. The COM dollar complex this week is going to be quite interesting. There's actually much more event risk against the COM dollars than anything else. We have the RBA rate decision, we have the BOC decision, we have Wheeler talking from RBNZ, so there's a lot of central bank speak and central bank action. We also have Australian GDP, and I think it's about it as far as data set goes. On the Australian side, but it's all going to clearly have some major impact. But against that backdrop, it's really going to be a question of U.S. yields. If U.S. yields begin to retreat off the highs, if the 10-year starts to drift below the 240, that's going to be very productive for the Aussie dollar and the Kiwi dollar, because at this point, the market is very convinced the RBA is going to remain stationary. We've had better than expected retail sales. Growth in Australia is within the band of where the RBA wants it to be, and therefore very little reason for it to cut rates at this point. Dollar CAD still enjoying a little bit of a boost from $50 a barrel oil and the fact that OPEC has agreed to a cap, although we'll have to see if that $50 holds. I think 50 to 55 is pretty much the cap at this point. It's going to invite a lot more production if we get anywhere above that level, and it naturally bring the oil market back down. Remember, the frackers are very, very efficient at this point and can essentially operate within these prices as long as we stay around the $50 a barrel level. So CAD getting better data also on the employment front. Generally, basically, Canadian economy is responding far better against the low oil prices than the market had initially thought, because of its better diversification and just better infusion of foreign capital, especially from Asia. So therefore, Canadian dollar very likely also remains relatively bid, and I think that whole 35, 36 level could very much have been the top for the near term. Kiwi, a little bit of a laggard, but still remains relatively well bid here around the 71 basis. And that's about it. There's really not much else going on, but it's really going to be a function of two things: just how dovish the central bankers are, and they really are unlikely to be super dovish, and whether U.S. yields begin to retreat off the highs, which is going to give it the boost that the carry trades seek. For now, Aussie dollar 75.50 is the resist. Support still remains 73.50. Dollar CAD now resist moves down to 3,400, and support now comes down to 132. And Kiwi dollar still a 70.72 trade basically. Let's take a look at the charts here. I think you can see this much clearer as we go forward. So let's just take a look at the Aussie first. And Aussie making a higher low over here ahead of the 73.50, trading relatively well today at 74.52. 75 obviously going to be the very big initial resist area. This is an area where, well, 74.50 really, former support becomes now current resistance. We break above that, then the next level becomes the 75.50. Aussie really would have to verticalize higher only if U.S. yields start to crawl back down. As long as we stay at this around 240, 250 level, very hard to imagine Aussie starting to generate any kind of upward momentum, because it's unlikely that we have any upside here. We basically don't have any downside, but we're unlikely we have any upside. One thing I forgot, we do have Chinese data as well, Chinese trade data, so that's going to be very important. Chinese data has actually been surprising to the upside. All of that relatively supportive of the COM dollars at this point, and that's why you're starting to see better price action last week. So this week should also be the same thing. Now, here's the thing that I was talking about. This to me is the most interesting chart in the COM dollar front. This very strong rolling top here in dollar CAD. Remember, I've been a bull dollar CAD for a very long time, and it's the first yellow warning signal to me that Canadian dollar is actually probably going to be a sell the rallies rather than buy the dip trade at this point. So if we get any kind of a move back up towards the 33.50s, pretty decent way to establish a beachhead against this 35.50 top side. The only thing that would break it to the upside would be a collapse in oil prices, which is very unlikely, given the fact that we just had an agreement right now, but very much worth watching. And then last but not least, the Kiwi dollar trade here, looking better, certainly. We're making a nice round the corner. The 70. 70 now becomes, this is what, 1, 2, 3 times the support. We'll see if Wheeler wants to kind of rain on everybody's parade and suggest that there'll be more cuts to come. But for now, the RBNZ rate cut that they've put in place has pretty much been what the market expects. And if there's no further rate cuts and U.S. yields begin to collapse lower, it's very likely we could certainly move through 72. But 72, 73 is going to be a much more challenging corridor as we go forward. So slight upward bias still in the COM dollars, with the Canadian dollar probably the strongest of the three in terms of momentum and fundamentals. to the upside. And of course, all of that central bank speak next week that's going to probably have a very serious impact either way. Be watching all of it very carefully. Boris Schlossberg, over and out.